in Asia and the direction of travel for today. We have a surely very Pacific-oriented group this morning. We've got California, we've got Singapore, and we have got India. So a great global range on the Pacific side to this story, which is a good place to look at it from this week. We've had a lot of perspectives from the Middle East and the West, and certainly Europe. So it'd be very good to get a view from Asia on the sort of ongoing OPEC plus impasse. Let's kick off this morning with Vandana Hari.
Sean, you lost your...
I suppose he's saying all wonderful things about me now, but I can't hear him either.
Am I? I'm muted. Let's kick off again. Let's introduce our first speaker this morning, Vandana Hari, who is the founder and CEO of Vanda Insights. Vandana, the markets open this morning in Asia, continuing that downward trend after the sort of bullish sense that this impasse for OPEC Plus would be positive for prices. We're now finding that this is drifting in a slowly but surely downward motion.
Yeah, it does seem that way. We have seen Brent go from highs above $77 2 days ago. So in just 2 sessions, it has slipped from 77 to 73. We had what one would call easily a bullish set of data from the American Petroleum Institute, almost 8 million barrels of drawdown in commercial crude inventories in the US last week, 2.7 in gasoline inventories. I mean, that's got bullish written all over it, but the market has practically shut that off. And, Brent now sitting just above.
You think the concern, if you like, the uncertainty in the market that is gone through the immediate sort of front month and really looking at what are the main consequences? What is the worst case scenario of this OPEC plus fallout?
For sure. I think some of the possible outcomes of this rift that were perhaps sitting on the fringes last week when it erupted are starting to come back center stage. And I think last evening probably was a pivotal moment when the Wall Street Journal published that story on the UAE, citing anonymous officials from the UAE, but one would presume they have it on good authority, that the UAE is basically looking to sell as much oil as it can before a secular global demand decline sets in. And basically, they want to sort of front load all the money that they can make from this oil and having.
I always thought news was something unique. I'm not sure there's anything quite unique in that statement. I would have thought every producer would tell you the same thing. Yep.
It's the timing, Sean. It's the timing. We know there's this war going on between those two, between Saudi Arabia and UAE, and the timing of that story and prominently in the Wall Street Journal, it definitely had an impact on the market.
I mean, there's a lot of things that are in this space at the moment, including the UAE repeatedly stating over the last week their commitment to OPEC. I mean, you pick your apple off the tree, which one you want to focus on any particular day. But clearly, there's no secret. UAE has told OPEC that they want their quota increased to 3.8 from 3.2. I mean, 1 and 1 is 2. If you want 3.8, you want more oil on the market. I think when you put it into anonymous sources, you put it in the Wall Street Journal, it can maybe appear through the prism of something much more substantial than just saying an apple is an apple. That would be my sense. But let's bring in Narendra Taneja, the leading energy expert in India. I'm wondering, Narendra, have you guys coordinated this? The end of OPEC, oil prices falling, India must be happy. What's your thoughts looking at all of this from India's perspective?
Well, we'll be very happy if they decide to dismantle OPEC completely. I mean, it's in modern age, in days of globalization, cartels like OPEC shouldn't be allowed to exist. But that said, it's not in our hand, and I'm sure that they have their own reasons to say that we need OPEC. But the UAE versus Saudi Arabia and a few other countries behind UAE at the same time, UAE brokering kind of relationship between Iran and Saudi Arabia. So it's much more complex. It's like onion. So it's not only one dimension. So we have to keep that in mind. UAE is a very important country in terms of, facilitating Saudi Arabia on the one hand, Iran on the other, and at the same time, they think they can pump 4 million barrels a day, and they want that right to do that, and from 2.6 to 2.7, whatever it is today. So, and we'll be happy if they start pumping 4 million barrels and export that to, among other countries, India. And we have seen, significant changes. Like in India, yesterday we got a new oil minister who is a veteran diplomat, who knows how to negotiate, who knows how to deal with OPEC. And after a long time, we have got a diplomat as the oil minister. So there is a message, and it's a very well thought decision that in times like this, yes, it's a commodity, but at the same time, diplomacy, energy diplomacy is going to play a very significant role. And the fact that Prime Minister has brought into the cabinet as oil minister a veteran diplomat who had used to be India's ambassador to the United Nations and plus ambassador to several other countries. So I think there is a message, and it seems the government is now preparing for better kind of conversations with OPEC on the one side, and key exporting countries like Saudi Arabia, UAE, and Iran also, on the other. So I think we're going to see some interesting time. I'm personally delighted to have a veteran diplomat as India's oil minister. And at the same time, that we have very close relations with both Saudi Arabia and United Arab Emirates. And there are discussions, talks going on behind the scenes as well.
Well,
And
maybe
India
you guys could be the broker. We're hearing that Russia is brokering. Who would have ever thought Russia brokering a negotiation between the UAE and Saudi Arabia? And here we have it. At least that's what's being reported. Let's bring in California, the peaceful, loving Californians. Richard Redoglia, Chief Executive Officer at Matrix Global Holdings. From your perspective, the safe distance all the way in sunny Southern California, Richard, does this look like a storm in a teacup, or is indeed, do you perceive it as something more structural, more significant?
I think both panelists have made some very good points. To me, this continues to be a perfect storm for OPEC. For markets to go higher, you need to get people short. And to me, one of the other great ways to get markets to go higher is to let people take profits and to increase volatility and to increase uncertainty. Not to put words in the mouths of MBS and MBZ, but these two guys are very smart men. Is 4 million barrels at $50 better than 3 million barrels at $75? Doesn't take much of a calculator to figure out which is better. In a world where you're being told oil is not going to be of any use in 15 years, is it better to try to achieve a higher price? To me, and one of the major factors that occurred here in the last 3 or 4 years is the technology of information. We are now able to calculate supply and demand in real time. 10 years ago, 5 years ago, we never were able to look at a cargo leaving the port of Kuwait or leaving a country and saying, I'm cheating. Now they're cheating by the time dock has left, the ship has left the dock. And so I think this puts a lot more power in the ability of this information to determine what is what. And are these guys good friends? Are they? Is this? We've been played before here in this last year. We've seen a lot of things change that we've never seen before. And to me, there's obviously a lot of political machinations going on right now. But Mark Rich and Pinky Green and John Deutsch and these guys only could wish they had the power of MBS and MBZ.
If we take that sort of paradigm shift you're talking about vis-a-vis information, vis-a-vis transparency and the knowledge of the market, and you juxtapose that against this sort of managed market, this kind of micromanaged structure, never mind OPEC plus, but OPEC in itself. Richard, is this a moment in which, as we move into this new time, we've got total transparency, and many would argue we're into the era of peak demand? These two things have come together.
Fascinating.
Can an OPEC plus coexist with complete transparency and an era of peak demand, or is it every man for themselves?
I don't know. I just read a piece by Frederick Hayek on a speech from 1974 about how man doesn't really understand all this information we don't know. To say we know is foolish. We just don't know. And we're going to find out soon enough. Logically speaking, in my mind, that the way that demand is looking at, I see no other way for them just to manage it. Here's a couple facts. One is the current WTI second to third month spread was trading $1.37 2 days ago. It's $1.10 right now. You have to go back to 2018. There was a squeeze on WTI in 2018 for 1 month that caused the front to back month spread to go into significant backwardation above $1. It wasn't before till 2014 that we saw an extended period of time of backwardation. And it really wasn't before that, was 2018. So we're talking 8 to 14 years ago when the front month WTI spread was in significant backwardation. The price at that time was $110 and $125. So the fact that OPEC is able to do this at this point in time with demand year over year lower than it has been ever before is remarkable. So you asked a question, Sean, will they be able to do it? They're doing it. Right?
Vandana, just reviewing your Vanda Insights this morning, and inevitably the commentary that you were making vis-a-vis the Wall Street Journal piece, but ultimately in that theme, the longer this goes on, how great is the possibility from your perspective that more oil will flow, regardless of whether it's given this agreement doesn't happen?
Well, first of all, the longer this goes on, and I would say it's already gone on too long. Late last week, going into the weekend, my personal base case was that they will find a way to reconcile. Over the weekend, we had the two ministers come out and basically put their points of view through the media, and that's been going on for some, and which is never a good way to resolve, in my view. What should have been happening behind closed doors. But here's what is happening, I think, in terms of how the perception is starting to shift from that base case of late last week, where the market thought that they will bring it back home. So I laid out these 4 scenarios here. Of course, within each scenario, there can be sub scenarios, and there are others, but that I probably think are on the fringes. Look, I think a compromise can still be reached. If one is reached, it will obviously, I think, center on the 400,000 barrel per day increase that had been penciled in. I would think, given current prices, that would be bullish, putting Brent back into the high 70s sort of orbit. The UAE also has the option, in my view, to say that, okay, we'll continue with this deal until April. And since the whole dispute is after April, we leave after April. I think that is still pretty much steady as she goes. 400,000 barrels per day comes back. If the UAE quits now,
just a caveat on that point. One of the problems of the current sort of standoff is that the Saudis are not willing to proceed one more step, i.e. 400,000 barrels in August, without beyond April being agreed. So whether the UAE wants to do, it's not in the UAE's hands at this point. They've said their position is what it is. We won't do an extra piece without a renegotiation.
I'm not disagreeing with you, though I have to say, with all due respect, you seem to be putting forth the UAE's point of view, which is
that's the UAE position, is that, you're saying if the UAE was to choose to do something, the Saudis have said they're not going to proceed with to next month without the period of May being negotiated. So it's not in the UAE's hands to say, okay, we'll just do August to September, but we won't do November to January. That's not in their hands.
John, I'm not disagreeing with that. I do think that Saudi Arabia could also be a little more reasonable and just decouple the two things and say, well, in principle,
why are they not? I think that's ultimately the big question.
Let me just finish my thought. However, I do disagree with you on the point where you're saying everything is in Saudi Arabia's hands. No, the trump card for any member within OPEC Plus is we leave. That's their sovereign decision. And whether they see it in their interest or not, whether they see it as the right thing to do or not is separate. But that is, which is why I have put those as options. Of course, the UAE has the option to say, we are out of this. Look at Mexico, right? Mexico joined the group. It is still considered a part of the 23-member alliance, but it accepted a quota just for the first 3 months of last year's deal. It is still considered to be within it's not accepting any quotas anymore since July last year. So UAE has the option. It may be the nuclear option right now, but it has the option. And I think the market needs to and is starting to factor in some of those things, which had probably seemed way out last week, but are now starting to become a little more realistic. That's what I'm saying.
Narendra, meanwhile, back at the ranch, how is everything going in India? Obviously, you're through the big surge of the COVID second wave. What is the state of play at the moment?
Well, you see, we still have several parts of the country in lockdown, depending on where you are and how intense is the coronavirus situation there on the ground. But overall, the situation is better, and the sentiments are actually growing better. And more people are out in the streets, and traffic jams are back in big cities like Delhi, Calcutta, Chennai, Bangalore, practically in all major cities, which is considered a very good sign. It's very rare we celebrate, traffic jams, but these days we do. It just means the economy is actually coming back on the rails. But that said, at the same time, we have yet to see any significant, rise in terms of demand for petroleum products. That's mainly because many people are still working out of home, and many companies have allowed their employees to work, from home. So that means that, demand is not rising as fast as, for instance, we had expected, let's say, even 4 weeks ago. But at the same time, I think overall sentiments are very good, and we expect, many of us in the business, that we expect that, maybe in this fiscal year, probably the demand for petrol and diesel, both, we are going to see that demand will go up by 14 and 17%. That's, in comparison to last year, not in total, and which is a very good sign. And we think by December, you're going to see impressive kind of, rise in terms of demand for petrol and diesel, which is, as I said, but at the same time, if there is no third wave, as some doctors and scientists are predicting, but there are many others who say that won't happen, because vaccination campaign is doing reasonably well in most parts of the country, and the results are very good. So probably we'll be able to stop it. And but we still don't know. We're keeping our fingers crossed. But as I said, that overall situation as of today seems to be reasonably good, and that gives us very strong reasons to be optimistic about this financial year and the following year. And we hope that by end of the winter, that's a very important festival time in India, that's in March, like the holy time, we hopefully will be out of the COVID situation. But then this virus is as unpredictable as North Korea. So we really don't know what will eventually come out of it. But just a quick point on that. What I said earlier was that, not brokering, I said facilitating. In diplomacy, there is a huge difference between brokering something and just facilitating.
Okay, Richard, India in some slightly better place than it was recently as the world's third largest energy importer. The US continues to march ahead. As Vandana mentioned earlier, the inventories took a big draw, at least that's the API reporting, and we see the EIA come out later today. Is the 400,000 barrel a day increase that OPEC Plus has signaled they have agreement on? They coupled this other thing about quotas, but the agreement does seem to be about the increase. Is that sufficient to calm the price of the market down? If they do go forward with the 400,000, would you expect that to be bullish or bearish signal to the market?
I think it would be bullish. I think our demand is still significantly lower. I think in one of your talks earlier last week, the demand increase is expected by year, and it's been from 2.5 million to 8 million barrels. So we're going to get back again. I'll say it again. We've never in history had demand lower year over year and a market in backwardation. Never. It's never happened. Full stop. That's it. So what do we say about that? Obviously, they're managing it in the proper way. I think, as I said before, I think the correction we just experienced here was extremely healthy for the market. It got people short. It allows people to be bearish. Remember, we're talking about Abu Dhabi, about this idea that they're going to go off on their own. Well, if you want to go off on your own, what do you do? How do you set yourself up to do that? Well, I know, you create a benchmark and you sell it forward. Have they done that? No, we're not seeing that at all. In fact, when I monitor the Murban contract, great contract, it's starting. The open interest in Murban is lower than what it was 2.5 months ago. The volume trades in a very sporadic way. Open interest never changes. All the other contracts that were developed to go along with Murban, to me, to have a successful benchmark, you need gasoline and distillate and ways to hedge it, create liquidity. There's zero open interest on them. So
does the existence of Murban, do you think, obviously, as you say, in its early days, this is the new Abu Dhabi contract, does it propel the UAE into a more difficult place in terms of being inside quotas and limits, because this is a contract of crude oil that needs to be openly traded without limits?
I don't think so. In my mind, it's not true. In my mind, it's created open interest, and that's all it's done. It's like every other contract that we've seen. The only two successful contracts are WTI and Brent. They're the only two that saw significant growth from day one and continue to grow every day until they became the benchmarks because of liquidity, because of cross trading. Murban is not doing it yet. The open interest remains around. It's a step function, 20,000 to 30,000, about 45, 50,000, and the volume trades anywhere between 2,000 to 20,000 on a given day, which my guess is some big block trade that goes along, that someone does some big spread trade and then moves on to the next day where it trades 2,000 contracts again. So I don't think the Murban contract is giving them anything special.
No, but my point ultimately is, does it, because it's the first OPEC country to launch a contract that is positioning itself to be a global benchmark, does that condition the UAE to have to think about stepping outside of a quota structure in order to be able to have a free and open contract?
I think my guess is that the management of Abu Dhabi wanted to have a benchmark.
And can it have both? Can it be within an OPEC
I don't know.
structure?
It's like if the CEO or the sheikh says, I want to have a benchmark, what do you say? No, you're not going to have a benchmark. You make the benchmark. Is the benchmark going to be real? Is it trading? Is it valuable? I don't know yet.
Okay. Vandana, let's look at the point we were making earlier, this coupling. What is your sense that these two things have to go together at this time? What is driving that? Is there an urgency about this coupling happening at this time?
I don't really see it. I mean, I've tried to look at it from different angles, and perhaps the only significance that I would attach to it is wanting to give a forward guidance to the market, sort of a bit like what one would expect or hope the Fed to be doing, which is that, okay, what will happen, like maybe some parts of the market might think, what happens after next April? What if by next April there are still barrels being withheld? Does everybody flood the market from May? So in terms of providing some sort of forward guidance, but more interestingly, I think I also coupled it with the fact that they have agreed on a 400,000 barrels per day increase, which, as Richard was saying, falls way short of most expectations in terms of what the deficit supply, what demand on OPEC crude will be. That's one. And the other is, I think it's an important signal or a key signal, perhaps Saudi Arabia wants to send to the market, that we are in this for the long haul. We're going to keep the reins on the market for as long as it takes. And to my mind, maybe that's why they're digging in their heels. It's important for them to send that signal to the market. But otherwise, really, I mean, can it be decoupled? Absolutely. I think in the interest of a compromise and moving ahead and giving the market the extra barrels it needs, as Narendra says, everybody's agreed, bring it on. I think it should probably, that's the best way to go. Just decouple the two things.
Let's bring up the survey question. I was struck by the piece that got sort of buried beneath the news, which is the fact that they were planning to give a 5-month forward guidance, August right through to December. And lots of our discussions in recent weeks, people were saying, no, they should go month to month, at the most 2 months, but they were actually willing to give 5 months, which I thought was quite in this current climate, a big window. But What is the most likely outcome of the OPEC Plus impasse? I mean, pick the apple off the tree that you want in a way. This will be resolved this month, or Brent drops into the 60s, OPEC Plus deal falls apart, or indeed the sort of nuclear option, UAE leaves OPEC Plus. It would seem in some regards, what's the most likely outcome today? What might it be if it's still around in a month or two? Some of the options grow. But at the moment, what do you think the most likely outcome is today? And let's go around the table on that question. Narendra, it's towards the end of the Middle East week here. We're going into Eid in a week's time. What do you think is the most likely outcome of where OPEC Plus goes with this current decision?
Well, my sense is that, there is too much at stake, and they may fight, they may be kind of, fighting out in the public domain at this stage, but at the same time, they know that a divided OPEC is in nobody's interest. Of course, big consumers like India, we would like to see a divided OPEC. It's a very good news for us, but we know it at the same time that all these countries involved, especially UAE and Saudi Arabia and Russia, they're smart. They know. I mean, they will fight, they will convey this message, but my own sense is that over the next 4 weeks, they probably will find a way forward, and we will be talking again. I don't see UAE actually leaving OPEC because there is a lot in stake. So I think these are all kind of diplomacy, of which I've been formerly a student, and I know that you sometimes make noise just to get out of something good out of it. It's, I think, just positioning by UAE. I don't think they will seriously considering to leave OPEC. They're more to gain while staying within OPEC than actually staying out of it. We saw in the past Indonesia. We have seen some other examples too. So I don't think they'll be quitting. And so they will find
just to come forward. To the point that is in this, is it inevitable as we move into the peak demand era, as argued by luminaries as Mark Moody Stewart, who is still on the board of Aramco, former CEO and chairman of Shell, who has argued for a number of years that the low-cost producers will inevitably have to produce to their full capacity, and that the era of curtailing supply for elevated price will come to a close, and are we getting closer to that? Is that inevitable in your thoughts?
Well, there is an element of truth in it, because look at the scenario today. All the big so-called super majors, with the ExxonMobil, Shell, and other players as well. I mean, they're under tremendous pressure from public opinion, their own shareholders. So basically, gradually, they're not going to go completely off the radar, but they would not be as powerful and as significant as, let's say, they are today or they were yesterday, which means the state-owned entities like Saudi Aramco, and other parts of the world, their importance and on the overall picture of the energy scene is only going to grow, which means that countries like India and China, for that matter, another big importer, they would have no alternative. But at the same time, let me share with you that countries like India and China and several, they find it actually easier and better to deal with the state-owned entities than with ExxonMobils of the world or Shells of the world and so on and so forth. They think then they can just strike a deal which will be more kind of at the political level than at the level of CEO in Texas somewhere. So I think over the picture, fundamentals in many ways are changing. And therefore, OPEC, over the time to come, I may have a personal view, that's a different story. That's more in a lighter vein. But sure, OPEC actually is going to grow more important in time to come as a producer, as a majority of oil production, moves in the direction of state-owned companies. So we are going back to, let's say, the era of 1970s and 80s as far as OPEC power is concerned. So I think one should not, and UAE knows it very well. If they move out of OPEC at this stage, they will be a loser, because OPEC is only going to get stronger in time to come with the state-owned entities playing bigger role than ever in the past. At least
especially if we see the OPEC Plus consolidating into being the new OPEC. Richard, your thoughts, closing comments on the Joe Biden, the U.S. administration, sort of slowly bringing their voice into this discussion. Is that a serious waiting? What's your thoughts?
The Journal had an article today about the cognitive dissonance of Joe Biden. Joe Biden doesn't know up from down, as far as I'm concerned, as it relates to oil policy. They stop the Keystone Pipeline. They stop ANWR. They appoint a cabinet that wants to stop oil production. They're changing tax laws to reduce oil production. And I've said before, the worst thing you can do is cause oil prices to go high. That will hurt the poor the most. And so we effectively, and Narendra just said exactly right, OPEC is going to get more powerful. And as a believer early on and from the 80s and 90s in peak supply, I tend to believe that we really shouldn't too much believe in peak demand at this point in time. And so in my mind, we are handing the keys to the kingdom. And I said, this is a perfect storm for OPEC. We are giving them everything they need. In California, I'm not sure if you're aware of this, but Governor Newsom wants to stop all oil production in California by the year 2045. So let that think in. Think about that for a second. This is why marijuana is legal in California, because you have to smoke it to believe that that's a real policy that you want to take in place. And so here we are with people like MBS and MBZ who have the power that really no one I believe, has had before, given the information that's in front of them, to actually drive the price to a level that meets their budgets and gives them the ability to take present dollars now instead of cheaper dollars later. So is $80 better now, or is $5? I think it's $80
I still struggle whenever I think of Governor Newsom, that he used to be married to the current partner of Donald Trump Jr. I mean, it's what universes did they cross over? But that's another story for another channel. Let's get the survey result and give Vandana the last word this morning. 61% POW. Resolved this month. That's an optimistic group. Vandana, your closing thoughts on this important topic.
I am in that optimistic group. I think a resolution will be found. I agree with both my fellow speakers. I think it is in the interest of certainly all the OPEC members. I think it's in the global community's interest, because we do need market supply demand to be managed at least the next several months. I think we have enough uncertainty with COVID and coming out of COVID. We don't need this additional uncertainty. So I think it will. To your other question, I don't believe demand is going to fall off a cliff anytime in the next 10 years. So I think maybe the question of stranded resources for the oil producers in itself is going to be moot, but it doesn't matter, because right now there seems to be a fear and an urgency. So I think OPEC plus OPEC will definitely remain relevant, but the more it has to restrict its production in the coming years, the more the tension will be in trying to keep it together.
Well, that seems to be like a good place to wrap up a week in which we're very grateful to OPEC Plus for providing us with lots of drama and talking points. If nothing else, it's very interesting, because I do think it brings up a lot of big themes that are inevitable, hairy jumpers that have to be worn, the future output quotas, all of those sorts of questions are big and need to be tackled at some point. Is it today or not is another question, but it's certainly interesting, and we'll see how things go over this long weekend. We didn't even mention, of course, there was an explosion in Jebel Ali in Dubai last night on a ship that seemed somewhat random, but are any of these things random these days? Who knows? But it happened, and just to acknowledge that it did. Richard in California, thank you so much. Narendra in India, thank you very much. Vandana, as always, in Singapore, thank you very much for your insights, and the Vanda Insights published on the Daily Digest today. So have a great weekend, everybody. We'll catch you on Sunday with the week in review, and maybe there'll be some big changes over the next 48 hours. Take care. All the best. Have a good weekend.
Thank you. Bye.
Thank you, everybody.